Good morning, everyone. Mark Cavar with the Rate Watch Report. Still haven't figured out the music thing, but anyways, here's where we are. Before we kind of look at these technical charts, let's just kind of take a quick look at some of the fundamentals that will, I think, be big today on directing where the mortgage-backed security market will be heading, and as a consequence, interest rates. Jobless claims. There was a rise in the jobless claims. That could be a thing that could drive some rates down. It wasn't a significant rise, but after 6 straight weeks of a fall, it was in fact a rise. But overall, in the last month, it was overall down. But so that could be something that would drive rates down. Driving rates up, I think, is a little potential stronger today. Yesterday's 10-year auction was not good. The bid to cover ratio was poor, which leads to fear today that the 30-year auction, which could be, I think, could be a big driver of what's going on with the mortgage-backed security. The 30-year auction is today, so that's something to watch out for, and that could have a significant impact on where we're at with interest rates. Now, where we open to, here's our candlestick for today, which, as you can see, below the 30-day moving average. Now, the other day, I kind of drew a chart right around this line here, which I'm following if you follow my yellow cursor, and right around the 99-point line here, and also when I looked at them in a convergence, that this kind of represented sort of a shaft of an arrow, and that could be our new trading range. Now, we opened, of course, below that so that shaft of that arrow. Now, what's positive about that is, if you'll notice here, the market doesn't like gaps, and right here, if you draw the line right through here where I'm at, we've closed that gap. And if gaps don't get closed in these technical charts, they usually become a point of resistance or a point of support. So closing that gap and then potentially closing this gap here that we had between yesterday and today could be very important. Now, this is the candlestick today, but remember, it doesn't matter so much what intraday trading happens. It can be an indicator, but it's defined by what the opening and the close is. So today could be an interesting day because of that 30-year auction as well. But right now we open below the 30-day moving average on the mortgage-backed security market. Down, obviously, that would indicate some pressure to drive rates up. Now, what I've done here is I've kind of blown this up and taken a look at this. This again, this 99 point, where this line is right here, and where this line is right here is the quote the shaft of that arrow that I had mentioned the other day. And here's where we're at right now. Now, this here, here is here's what's important to look at for today. Here's this right here, this line that's coming up here is the 100-day moving average. Here's the 30-day moving average and the 10-day moving average. What happens today possibly could be a strong indicator of what trading range we are in. If after we get some news in this 30-year auction, we kind of blow above this line, in this 30-day line, we could be looking at the bottom of this trading range with the potential to go up, i.e. rates go lower, or we could be at the top of this trading range here, which is defined by this middle line and this lower line, which could mean we're at the top of this trading range with the potential to go down as a consequence, rates going up. So this this arrow that I talked about the other day could quickly be a broken arrow today, and we could be quickly into a new trading range, because that, like I said, those treasury auctions are pretty. And so that's our technical charts today. Right now, as it reports in, our lenders, of the 89 lenders that we have reporting in, 81 of them are having negative pricing relative to rates. So that's probably not a good indicator as we get off to our start here on the West Coast here on this Thursday morning. Hope you found this information helpful. Have a good day, everybody. Thanks for watching. Bye-bye.